recording now, and we're still going to just give people a few more time. The guest as well, you can try to remind your community and other people who had intentions to join to like come on. Okay, so it's been 4 minutes. Like I said, 3 to 5 minutes just to wait for others to join. Okay. Thank you guys so much. Good morning. Happy Monday. Hope we had a well-rested weekend, and hope we took out time during the weekend to study, analyze the charts, try to learn from our previous mistakes, try to see how our week was in general, point out things you could have done better, and if you can implement them this week. The most important thing about this journey of ours is the ability to pick our corrections from where we fall, make amends to them, and then make them work for us. Thank you once again. And this is just like a little thing, okay, because I would usually post TN charts on the YouTube channel for those who have missed it, and for those who would like to go back to catch up. Please do me a favor when you get to YouTube and you're watching it. Don't forget to click that subscribe button. Don't forget to hit the bell notification so you get notified for every time you miss a trade. I say trade, you miss a session. Okay. And as well, share the links to other people, who are interested in learning. I mean, it doesn't matter if you're a beginner. Some of the things that we're going to be talking from time on time on TN chats are going to be like extremely relatable things that would help you grow, even as an intermediate trader, a beginner trader, whatever the case may be. So thank you so much. And towards the end of the call, I probably would another CTA for those joining late. So you'd have to, forgive me for that. And lastly, but not the least, please always leave a comment in the comment section on the YouTube channel. It just kind of helps me know if you enjoyed the session and if you'd want, more things, and you could ask questions. I could use those questions to create like more topics and themes to invite more persons to speak about them, and I could also talk about them as well. So I'll just take them in as facts. Okay, thank you so much for joining. Let's get to the event of the day. So usually I would always start out by saying, how was our week? One or two persons would just share how their week went. So if you are on the call and you feel like, okay, you just want to let something off your chest to share how your week was, if there were any mistake that you made throughout the week, just kindly share. Let us So please feel free to unmute yourself after putting your hands up, or just mute yourself quietly and then share. Okay, thank you very much. So let's have like 5 minutes to that. Okay. Anybody? Okay. So if nobody has anything to share, I'll go ahead and share mine. So my
No,
okay.
yeah. Good morning, everyone.
Morning.
My name is Kambai Allen.
Okay. Thank you
First
very
of all, you said we should share what we obviously the week just begun, so there's really nothing to say, but maybe talk about expectations, so to speak.
much. Okay.
Right.
I was thinking about last week. My bad. Usually when I say the week, I mean like last week. How your last week was?
Well, last week has gone.
Okay.
Last week has gone. Let's speak towards the future, if you don't mind.
Sure. Feel free.
Yeah. Well, first of all, I want to appreciate you on this platform, the time that you have created and dedicated it to serving yourself and also serving us generally. That is one. And then also, goal every week is mostly to make money, right? And be better than you were yesterday. So, and most of your analysis went the way you said you were going to. And then, like a wise man once said, you really don't know the market. I never play against it. So, looking forward to the week. Today, we already know that today is like US bank holiday, so anything can happen. And then, depending on which pair of trades we are going for, what else? So basically, what I'm looking forward to this week is successful trades, successful analysis, and being better and picking things that were missed last week. And hopefully, this T and chart session would go great and be successful as it proceeds. So yeah, basically that's it for me.
All right. Thank you. Thank you so much.
Yeah.
I appreciate the acknowledgement and the appreciation and everything. Just want to say thank you. I pray I am graced enough to continue to create the time to put this out every week. I mean, sometimes the mind gets lazy, the body gets lazy, like everything just gets tiring sometimes. I mean, I struggled a lot last year, but this year I'm hoping to be much better in every aspect and to continue to serve and to provide the value that I can give to the most people. And as always, all the glory is for God, is to God, and I'm just sharing a part of it. So thank you guys so much. So let's hit it. So first off, I want to say let's look at the charts, but I don't know how much time we can spare considering the fact that we have two guests today. And the themed topic for today is understanding the importance of macroeconomics in your trading journey, or how it affects your trading system, and all of it. Now we meet today. I have my friends. I mean, when I mean friends, I mean they are my friends, and they've impacted in my trading journey as well. They've impacted in my life as well. I have with me today AG, okay, Agaba. So the reason why it's AG is, his foreign friends over there in the UK don't know how to pronounce Agaba, so just decided to shorten it for them and call it AG. And then I also have with me if I call her my mentor, should deny it, but my mentor that will always deny it, Johanna Ado. Thank you very much for accepting my invitation and being a guest on this call. I mean, these are two people that when I think of my journey and I think of the idea of fundamentals in trading, they're the first two people that would always come to mind because I have seen them grow, I've seen them understood, I've seen them teach me, and it's different. It's different when you've seen someone actually learn this thing to the point where you're like, damn, now you like they are teaching you and you're like you're still there and you're you're just stuck in that ow and wow kind of moment. So I have brought them on this call today to kind of like, at a very subtle and introductory phase, just kind of shed light on what macroeconomics is. AG is a graduate of accounting and a master's in supply chain logistics, so he has fundamental knowledge about macroeconomics and he has studied broadly. Johanna Adwa as well has broad knowledge on macroeconomics. I mean, I met her and we started trading purely fundamentals then. She used to swing trade with me, but now she's in love with gold. So enough of my chit chat and long story. I want to bring in the first guest today to just introduce themselves, and that would be in person of Johanna. Johanna, thank you very much.
Hi, everyone. Thank you. Thank you so much for that beautiful introduction, Ryan. I really appreciate that. So yeah, as he mentioned, I am a dear friend, and I do see him as my mentor, actually. He has also impacted my trading journey and the way I look at the market. So I've been trading for 4 years. It'll be my 5th year this year, and my journey started off as a swing trader. Okay, so I used to swing trade, and I will therefore have a knowledge in fundamentals because it would kind of like would kind of make sense when I used to swing trade a lot of different pairs. But right now, I'm currently only focused on gold. I've only traded gold and gold only for a year. But I do look at fundamentals here and there, and I'm going to basically my part of this session is to give you guys a brief understanding of how you can view macro economics, right? Because you have fundamentals, you have news release and stuff like that, but then you have the in-depth information of how the economy is actually moving and how what we're actually trading. Because it's one thing to say that you're trading currency pairs, right? But at the end of the day, you're actually trading a country's economy. So that's basically what I'm going to like talk about. So yeah.
That's completely and thank you so much. So let's have Agaba, AG, introduce himself as
Hi everyone. Um, Thank you very much for having me on this call, everyone, and thank you very much for having me on this call, Ryan. I would say you're you're like my mentor. I think you already know that. So I started in the financial markets because of Ryan. And the truth is, I wouldn't say I started off as a swing trader. I started off using expert advisors, to be totally honest with you. I thought I could cheat the market. So I tried to use bots and I tried to use technology has its place in trading, but I tried using technology at first, and I lost over $200. So I learned my lesson the hard way. Yeah, and then I had Ryan there to talk some sense into me, and he made pay the price to study with it. I've been trading in the financial market and studying. I've been an enthusiastic student in the financial market since 2020. So I've had the opportunity to learn from the market. So my reason here today is just to expand more on probably some of you already have the fundamentals of what trading the Forex market is. Some of you don't. I'll leave most of the hard work to Johanna and then I'll just put some icing on the cake. So thank you very much.
well. Thank you very much, AG. So me as well, I've also come to engage them. So I just want to put this out there that everything you see on the screen has not been pre-discussed. Now, I mean, some people would say, oh, whenever they start giving pointers, it means it has been pre-discussed. But I mean it honestly. It hasn't. Like, I remember someone saying, oh, won't you tell the speakers like the questions you're going to ask them? I'm like, no, the idea of the call is to have it come naturally, is to actually show you that these people know what they are doing and what they are saying. Because if it's pre-discussed, So sorry, I'll just please, I would make someone a co-host just in case other people come in, so you could just help me with them. Can't even see how to make that possible. Thank you guys. So sorry for that interruption. Yeah. So I said I have a few questions that I would want to start to ask this awesome guest of ours that we have on the call today, just to kind of like expand on our knowledge and all of those things. So I'll start with AG. Okay. So my first question goes to you. How how exactly, okay, would you describe the understanding of macroeconomic trends helping traders create an edge in the market and in their trading every day-to-day trading or how they trade?
Thank you, Ryan, for that. I would say that's a really interesting question. First, I'll start by saying when people hear the word Forex, what comes to their head first is, oh, make money so quick. I just need to put $100 in and then I make $1,000. It's so easy. Yeah, it's all about looking at that thing that looks like a candle, keep on going up, coming down, coming down. That's what people think. But at the end of the day, you're trading economies, to be honest. You are trading currencies. It's called foreign exchange for a reason. It's not just Forex or FX or something. You're actually trading economies. So the more you know about an economy, the more edge you have in the market. So I believe you have to keep in touch with updated news, like news active. You have to be active, knowing what exactly is going on in America. That's the dollar. You have to the United States dollar. You have to keep in touch with currencies like that because it's the reserve currency. So what's the reserve currency? It's a currency that is used as a medium of exchange, and you can also use it for savings. So it's like it's like the currency of currencies, basically. They decide what happens in most economies. I'll just leave that there. But you have to, if you're trading a pair like the pound and the Japanese yen, for example, you have to be in touch with the news, what's happening in America. Oh, sorry, what's happening? Yes, in America. What's happening in the UK? What is happening in Japan or the Asian continent as a whole? You have to be in touch with the news going on there. This will give you an edge in the market because yes, technical analysis is very good. Analyzing chart is very good. But I feel like at the end of the day, fundamentals, macroeconomics, they tell you where to go. Technical analysis just gives you like a step-by-step direction on how to get there. So if you don't know where to go, then the directions are definitely useless to you. So when you're able to know macroeconomics and which is called fundamentals, basically, that will create the pathway for you to having a solid edge in the market. Thank you.
Okay, thank you guys very much. I hope we can all hear me. I feel like my network is pretty good. Issues with my country being Nigeria, but if you can hear me, please just leave something in the chat section saying you can hear me, so I'll be sure to go on. AG, can you hear me? Am I breaking up? Okay, someone said they can hear me loud and clear. All right, then thank you very much, Rindaps. I appreciate that. So thank you very much for that insight, Agawa. Uh, for me personally, I would say you know, when it comes to macroeconomic trends, the one mistake a lot of people make is they view when you say fundamentals in the trading environment, the first thing that always comes to their mind is, oh, NFP, CPI, PPI, that's like the generality of what they get. And I feel like it's completely understandable and relatable considering the fact of how most of us kind of got into understanding what fundamentals is by trading news. NFP is one of the major indicators in terms of macroeconomics due to its level of impact. But what people don't understand is when we're looking at macroeconomics, there's usually like a larger scale and a minor scale to keep that in mind. And those are some of the things that I believe Johanna would just, like she said for my introduction, she's going to try and simple it out for us and make it easier for us to understand. Thank you very much, AG. Next thing, Johanna, is my question for you. I hope you can hear me and you're still on the call.
Yeah, I can hear you.
Okay, thank you. So, before you hit us with that with that bombshell of the difference between like understanding macroeconomics on just what they see, from the Forex factory, FX street, and how deeper it goes, I just want to ask and say, do you think that macroeconomics is something that should be highly prioritized, considering the fact that people always come up with talks about, oh, I'm a technical analyst, technical analysis is all I need, kind of thing. Do you feel like there's a high level of importance for them to consider macroeconomics, regardless of their technical analysis expertise?
Yeah, okay. So I personally think that you should definitely have an understanding of it. Just like Agawa said, that at the end of the day, it's all about simplicity, right? So I view fundamentals as a catalyst to where price is supposed to go anyway, and the technical side of it is for you to understand the entry and the exit. Right. So when you use technical analysis, you basically base your analysis on where are you going to enter and where are you going to exit, right? When you have the fundamentals of things, then you have an overall direction to where price is going anyways, right? So um, fundamentals will never really change or fundamentals will most of the time change the direction of something, but that's a long term. It's not like, oh, because we have NFP today we're going to see the result of it, the overall result of it in one day, right? We'll basically just see quick moves. We see moves that are highly volatile, right? But if you actually dive into what the report came out as, the consensus, right? The before and the after, you might have a understanding of what will happen later on, right? Not today, not tomorrow, maybe in a week, maybe in 2 weeks, right? That's why we even have people that trade on the higher time frames, such as swing traders, right? Because they're basically basing their knowledge on where the move is supposed to go, and then they have their technical side which will basically anticipate their entry and then their exit of that trade. So I think yes, it's quite important. It depends on the edge you have and the kind of trader you are as well. Me right now, I'm more or less the intraday day trader, so I don't hold my trades for many days anymore. I can, but with gold, I found it more specifically good for me to just trade within a certain period of time. But I do still look at the fundamental that comes out because gold is heavily related to the US dollar. Okay, so I personally believe that, okay, without that it wouldn't be that, I wouldn't say easy, but I wouldn't have the knowledge of when to trade and when to leave the market if it wasn't for the fundamentals. Right. So yeah.
Okay, thank you very much. You see, like I said earlier, it is not just about what you see in your forex market. It is fairly deeper than that. Yeah, and we need to like put that into consideration, that the news we see is just, they're like, would I call them footprints of what the economy is going to be? Like when you go to your forex factory, you see things like CPI, you see the core CPI, then you see things like CPI Y/Y, which is year on year. Then you see things like M on M, which is like month on month. So it's just like an aggregate for what the previous months have been. Months are like quarterly. So like when you say M/M, usually like for 3 months, 2 to 3 months, you get things like that. So it is those aggregates that further, the aggregate of every, indicator, be it your NFP, your CPI, your PPI, whatever the case may be, that is what produces the overall direction, and you kind of have an idea how the country's economy is working. So there, you can view it on a smaller scale and you can view it on a larger scale, like I said. So thank you so much. If you're still watching, you're still on the call, don't forget to go back to YouTube to catch up. If you're just watching this on YouTube for the first time and you've been enjoying the talks process since, don't forget to hit that subscribe button, leave a thumbs up, and leave your observations in the comment section. And leave your observations in the comment section, and we would take up from that to create more topics in the in coming time. Sorry, please, if you're just joining the call, always mute yourself. Okay, please. Thank you so much for this and distractions in the call. Okay, my next question of discourse, obviously, I believe AG, this one is coming for you, yeah? But can you share an experience where a macro result affected your trade positions, either in a good way or in a bad way? And just by the touch of that, just a little side, kind of explain why it happened and what you could have done better.
I always feel like I'm in a job interview right now.
I
Tell me
mean, you're
about
saying like you're in one, though, Paul.
it. Tell me about a time when yeah, but yeah. Like I said, emphasis on macroeconomics. I told you, I would say I was profitable in and out. So I make money, lose it, make money, lose it, just by trading just strictly off fundamentals. And then I think the turning point for me personally is when I started reading books. Sorry, just by trading technical. Sorry, I think the turning point for me was when I started reading books in general. So I then started to pick interest in macroeconomic books, and then I think there was just this switch in my head, and I started to see things in a more global scale. I started to understand the essence of fundamentals more. When you say fundamentals, I would like to just basically touch on some things because I have a lot of people that said they're actually coming to this call that don't really have the background in the Forex market to understand fundamentals. So I'll give you an example. So there are many key indicators when you look at things on a macro scale, but when it comes to Forex, there are things that highly impact the market. So, which is things like inflation, interest rate, unemployment, things of that sort. They impact the market a lot because when it comes to financial markets in general, not just the Forex markets, one thing you need to understand is perception. The cup is either half empty or half full. So when Johanna spoke about consensus, what she was trying to say is economists come together, they look at how the economy has been, and they try to predict the next result that is going to happen. It's like them saying, oh, with the way things are going now, with all the whole calculation things, we expect this sort of result. This was the previous result, but we expect this sort of result. Now, it is in your own best interest as a trader not to believe what they're saying because many times they can be right, many times they can be wrong. But you need to understand what exactly is going on in the economy for you to say, oh, okay, I believe they are right. Oh, no, I believe they are wrong. So it is in your best interest, as I figured out by my own self, that do not follow exactly what they are saying by the book. You have to understand the basic fundamentals which they are talking about. So I'll use the last NFP that came out. I can also use the CPI from this morning, but I'll use the CPI from this morning. So when you look at the current Euro USD pair, you would see it's on higher time frame, it's currently bearish. there was a retracement from last week, I think, and the week before on the 4 hour to create a. So I currently am on a sell trade on the Euro USD. Why? Because of fundamentals. I believe the dollar is strong enough to get me to my take profit. I don't need it to be strong forever. So I just need it to take me to my take profit. The CPI, the PPI that came out, well, that's producers price index. So that is for inflation in the price sector. So now, when you look at now, one thing I'm going to say is inflation is good. For you as a trader, inflation is good. But when you go to the store to buy food, it's not good for you. But you as a trader, inflation is good for you. So one thing you need to know is inflation. Why do I say it's good for you as a trader? Is you need to, like I said, perception is key. When inflation goes up, the central bank does something. If it is unfavorable for them, so they try to maintain interest rates between 1 to 3%. Anything higher than 3% raise flags. Now, what they do is when inflation is really high, they take interest rates high to reduce the amount of spending in the economy, basically. So they take interest rates really high to stop people from borrowing more money, stop businesses from borrowing more money to employ more people. Now, when they do that, it reduces the employment rate, and it also reduces how much these people that work for these businesses get paid. So it makes the spending in the economy go low, demand goes low. So there's more supply, so prices have to come down. So with all these things I've said now, the PPI this morning, um, let me also build from something. So the ECB, the European Central Bank, basically they manage the whole euro, all the whole euro, countries in the eurozone. So one key country you need to look at is Germany. Germany is really big when it comes to the euro because of their manufacturing power. They are quite robust in that. So results from Germany now, you need to actually look at it when you're trading euro-based pairs. So I personally this morning took a shot on euro USD. I believe fundamentally I'm right. I believe technically I'm right. But one thing I always say when I come to the market telling yourself you know nothing. Don't try to predict exactly where the markets will go. Have multiple outcomes. Anything can happen. It can go. The previous was 0.5%, and the consensus, that's the perception where analysts expect this percent to go to. They expected it to drop to I think minus 0.1%, which is to use that as a gauge to say, oh, okay, it's good. I would say perfect. But my technical analysis for this has met all the criteria I personally need to 7 a.m. my time. Fundamentally, I believe the euro is not strong enough to push prices higher. So yeah, I'll definitely go for a sell. I'll go for a sell because I believe the dollar is strong. If you check the DXY, so now the DXY is the dollar index. As a trader, you need to look at things like that too. It shows you the strength of the currency, the dollar, the United States dollar. Looking at that, basically, you're able to gauge and say, oh, okay. I might want to go. I might want to go short. So this is what I'm currently on. He said to tell him at time. So I'm actually telling him the time is now, which I was able to learn technical analysis with my fundamental analysis. Thank you very much.
I feel like you just give them so much, and I feel like it's a good thing because you have to go back to actually watch this episode again. It's a win-win scenario at this point for me, and I'm happy about that because he kind of exposed a lot at that part, trying to help you balance how to read, macro releases from the ECB, because the ECB is not just euro-based pair. It's an aggregate of basket of countries in the euro. So you have Germany, you have Italy, and what other country? I like the Germany and Italy. I like the two major.
What was in there? Yeah.
I like two major countries that contribute the most percentage to the EU. And after Brexit, when the United Kingdom, of course, left the EU. Okay, thank you so much, Agaba, for that insight. Joanna, I believe you're still on the call with me. Please don't leave me at this.
I'm here.
Okay, so what I'm going to do, Joanna, is I'm just going to let you go in and just kind of give us that I'm trying to look for the word, but the panache you actually brought in your introduction talking about how to really look at macroeconomics in terms of not just our weekly fundamentals, but on a larger scale.
Yeah. Yeah, I think I'm gonna share my screen. I think most of us, I believe like most of us are traders here, have probably been introduced to fundamentals somehow. Whether that's from a mentor you have or you've been reading about it. And I think that we have most of the time only touched on, okay, what is NFP? What is CPI? What is, what are all these news releases start coming out?
Yeah.
But I think like, okay, once you have that understanding, then people just check off like, okay, cool, I've been into fundamentals. Now I can move on to the next chapter of their trading journey. So, but I want us to actually have a picture. Like what I'm going to do today is I'm just going to try my best to create a picture for you guys to understand. Okay, so this is actually the foundation of what we talk about when it comes to macroeconomics, okay? And I know there's probably a lot of people here that are new to this whole field, sorry, or want to learn more about it. So I'm going to try my best to not complicate things. And if anything, please talk about, or Ryan, like you guys could correct me at any time. So what we're going to start with, you guys, are you guys seeing my screen?
Yeah, I can see your screen, Johanna.
Okay. So we're obviously seeing a chart here, which up here we see growth and down here we see time, okay? And then we basically see something shaped in an S. So this is basically what we call an economical cycle. Okay, so I think it's very important to know what economical cycle every economy goes through. Okay, so back to, when we're trading fundamentals, what are we actually trading? We are trading a country's economy. Okay, we're trading currencies. What is it? A currency represents a country's economy, right? Whether that country is has a strong economy or a weak economy. So when looking at fundamentals, our goal is to basically understand which currency is seen as strong, which is seen as weak, and then put them together. And then when we have these answers, we basically know how to filter out which pairs we then need to, or which pair will basically be more potential to trade than others, right? So you can look at the stock market as well. Like if you look at the stock market, what do they trade? They trade companies, right? Crypto is digital market. No, it's digital currency. And then you have futures, right? Many times people trade futures, such as you have gold in futures, but you also have things such as coffee. You have beans. You have a lot of other things that represent the future market, and then you have the forex market, right, which is currency. So my whole thing is that if we have, for example, let's say in the stock market, right? Let's take Microsoft and Apple. This is something I just quickly, while Brian was talking, I just had to like take notes on this. But if we take Microsoft versus Apple, for example, right? If Microsoft had a very healthy and growing economy, right, in terms of like their revenue and the overall company's health, right, and Apple has a totally shrinking or is on the opposite side, then we will have a significant issue. And just because of that, right, both of these companies, they represent the US dollar somehow, because they are a part of the US economy, okay? So if you're trading Microsoft versus Apple and you're saying, "Oh, I want to buy Microsoft." Obviously, that's going to be a good example to to use here, because Microsoft is on the booming side and Apple is basically on the shrinking side, right? And that's what we also have with currency pairs as well. So when we're trading Euro USD, when we're trading GBP JPY, that's basically how you're looking at it. You're trying to determine which currency pair is stronger versus other pairs. So this, guys, is what we call the economical cycle. Okay, so now it's been a while since like I've dwelled into it, but I want you guys to understand that when an economy goes through different changes, it goes through different phases as well. Okay, so now on these phases, we basically refer to a booming economy, right? And then we have what we call a recession, when the economy is going through a recession. So our goal is basically to understand that, okay, when we are in a cycle or we have a currency pair, right? Where in this cycle are we in? Okay, so every economy goes through this phase, right? They go through recovery, expansion, growth, boom, and then they will be at the peak, right? And when they're at the peak, right, then we'll basically go down all the way to when we have a bust, and then the economy will recover again, and then it goes all the way, and it does the same over and over again. So to now have a better understanding of that, when the economy is basically recovering, let's say we have to take real life examples to like for me to basically get you guys have that picture. We have to take real life examples. So let's say basically what's happening now in let's just take the US dollar, for example. Okay, so there's a lot of things that's happening in the US. Trump is now becoming new president. TikTok has been banned. There's a lot of things that directly impact how the dollar is going to be based. And the US dollar is the biggest currency. It's the biggest currency in the world, right? So being that, it will definitely touch within all of these phases in a cycle like this, right? So when the dollar is now at its peak, right, we'll now have inflation rate, right? As Akaba was saying, like you'll go to store, things are expensive, like it becomes too much, right? And then you need to basically turn this whole phase, or you need to basically turn the economy from being at its peak phase to being at its lowest pace, right? So how do you do that? That's when people like I can't remember the name of it now. That's when basically you have you probably know the name of it. What is it when those people, I can't remember the name right now, but they are the ones that are basically balancing out the economy. The ones in the US, if anyone knows the name of it, I can't remember right now.
Balancing the economy.
Yeah, but basically is it the Fed rate?
Oh, okay,
Yeah. Fed rate. Sorry. Okay, yeah. I got it now. Yeah, it's the Fed rate. So they are basically the ones that will now contribute to how the economy works, right? So if something is happening, such as the economy being at its peak, they'll now step in and they'll now try to balance it out in a way where, okay, if prices in the country is too high, they now need to like, okay, do other measures to basically balance that out, right? So they can now go from that peak session and then go down to a recession session, and then obviously continue that cycle. Now, the reason I'm showing this is basically for you guys to understand that there is more to fundamentals or macroeconomics than, what's the result of CPI or NFPs this Friday. There's more to it. You guys have to understand that we are trading a country's economy, okay? And emphasis on that so many times on this session is because when you trade a pair, you have to look at it from a view of, okay, where is the economy of this pair going, okay? Is it booming? Is it shrinking? right? And that will you'll now take that understanding and put that on your chart and use, for example, say the DXY, right? Okay, so the DXY, what is that? It's basically an index that represents the dollar. Okay, so it shows you an average index of where the dollar is. Okay, same thing with the JPY. You have the JPY index, right? Shows you the average of how the Japanese dollar is moving. So having the overall understanding of that, okay, I'm not only trading CPI or PPI for the sake of the volatility or for the sake of just jumping into a trade, which many people do, right? Because they wanna leverage on that volatility we get when we trade news, right? But what you can do, right, if you're on the better side of things, is that you will now look at the outcome, right, of this different results, and then you will then use that to your own benefit and understand, okay, this is what came out. How like Agaba said, you can't always trust the result that comes out, right? You, at the end of the day, you have to do your own research. But then once this result comes out, you will now use that to your benefit and like, okay, this is the outcome. What how might that change the economy, not today, not tomorrow, but like in the future scenario? Okay, so now people are talking about TikTok has been banned and stuff like that, right? And that makes me think like, oh, if that's the case, or actually I think it was this morning I read that TikTok is back in the US, but TikTok was banned or something. But if that's the case, what does that mean for the economy, right? So, okay, people don't really relate that to the US dollar in any certain way, but you kind of have to think of it as, okay, let's say unemployment rate, right? Because it actually does affect unemployment rate. So for those that doesn't know what unemployment rate is, it's basically think the percentage of people in a workforce who don't have a job but are actively looking for one. Okay, so it basically, unemployment rate, it helps to measure how healthy the economy is. Okay, so when we have lower rates, means more people have jobs, while higher rates suggest economic struggle. Okay, so now TikTok is being banned in the US. Wow, what does that mean to me? Like, obviously, it's not like a direct link to my gold trade during New Year's session, right? But you will definitely see that, okay, we're gonna have more straightforward market. Okay, so with gold, for example, for those people who trade gold, there's many times that gold often just range, right? It just ranges, it doesn't really move. And then we have those times where it basically just shoots up to the air or goes straight down, right? So that's a direct result of something that was just released, right? But if you go to the higher time frames, okay, if you go to the higher time frames, and then you kind of look back at things that has happened in the U.S. economy, like, okay, previously when we've had Biden, like the whole thing about Biden and his decision on what he wants to do with the war in Israel and like all of those things, they're heavily correlated to how we're seeing the market today. Even though these are the kind of things that happened a while back, right, 2, 3, 4 months ago, it will shape where price is going. Okay, and that's what I mean by when you're trading on fundamentals and you're trading macroeconomics, you're not trading based on the result you get the same day. Okay, you're trading based on something that's going to happen in a longer perspective of time, basically. That makes sense. So I don't know if anyone has any questions, because I'm just talking. So if anyone is writing anything, I'll just quickly look at it. So again, back to the chart here, or back to this picture, understanding that every economy goes through all of these phases, right? And it will come to a pit stop of recovery recovery and come to a high phase of peak where we now need to include the government, right? The Fed rates, right, in the US, they'll not come in. Same thing, we have those in Europe as well. They'll not come in and try to, you think of it as when you have something quite acidic, right? You need to dilute it with water, right? So it's not too strong of that thing. Same thing with hair. If the peak area is too strong, you need to do something with it, because we can't just be at the peak session all the time. It's not possible, right? The market needs to recover itself. When people are taking out loans from the bank and stuff like that, it directly relates to us being at the peak session, because okay, the economy is at its highest, the groceries are madly expensive, you now want to take out loans, or the government is now giving out more loans, or they're not printing more money, which basically means that, oh, okay, the value of that money, or let's say the value of dollar, for example, it basically loses its overall growth. So what are we going to do with that? We now have to dilute that situation. Okay. So saying that, guys, I think it's also, obviously, me personally, let me show you guys. Me personally, I use my FX book for like as an economic calendar. I know some people use Forex Factory. FX Street is also very good. I personally use my FX book just because I have the app on my phone, and I use the position size calculator from my FX book as well. But I believe that if you're gonna look at it together, for those who don't really understand, some people are basically just open their economic calendar like this, and they're like, oh, okay, today is this and this date, we have this and this news. And then I've actually heard people like, okay, they open their economic calendar and they're like, okay, just because it says medium or red hair, they're like, okay, high impact is mostly red, right? That's okay. They're gonna be like, I'm gonna just jump into this at 6 p.m., right? When we have a high impact news, and I'm gonna see whether we go up and down. And that happens often, more and more, over NFP and CPI and PPI and all of this high impact news, right? But I will say you have to be very careful with that, because one thing is to just jump into something just because you know it's going to be quite volatile, right? And I don't like to use the word prediction. I don't like to say, oh, I'm predicting this, I'm predicting. You don't really predict, you anticipate something. Okay? So when you're looking at fundamentals and you don't really have a lot of knowledge, right? You don't really know, okay, like, how am I going to use fundamentals directly in my trading? Okay, one thing is to then go in here, check what we're going to have for the day. You look at, you filter out medium or none or low or high impact. And then you have all these numbers, right? You have previous, you have consensus, and you have actual, like Agaba was talking about, right? So here is the consensus where they, well, you have previous first. So this was basically previous numbers. Okay, so this is what came out earlier. A consensus, what they anticipate for price to come. So this will most times come out before the news actually get released, and then the actual is what comes out of the result of that event. Okay, so sometimes when I first learned the difference, I was like, oh, okay, so previous means that, let's say this was the dollar, right? We have 2.1%. So the previous numbers were 2.1%, 2.1. And then the consensus, they're basically saying minus 0.4%, right? Like in the beginning, I'll be like, okay, does that mean that if this is minus, obviously negative for the dollar, then does that mean that, okay, that gold is going to buy, right? Because if something is negative, right, then obviously you look at, you then look at, let's say, XAUUSD, and you'll now anticipate, okay, since that was the outcome, then that means we have to buy gold, right? Maybe like 6 out of 10 times that can happen, right? Or even less in percentage if you think about it. It does happen sometimes, and I'm not going to say I haven't taken trades based on that. I have. It's all I have. I've taken trades based on what the actual has been, what the actual and the consensus has been related, but it's not the strategy. Don't say that, oh, because I've now been taught that, okay, I can trade the actual because of the consensus, and the previous I can now take a trade. No, that's not a strategy. You're not predicting something. Again, guys, you guys are anticipating the market, right? You're anticipating where price is going to go. And when you have the understanding of fundamentals and macroeconomics, you now know that, okay, fundamentals are a catalyst. Okay, what's a catalyst? A catalyst is something that triggers something. It triggers the move to go where it's supposed to go anyway. So if the dollar is bearish, if the dollar is bullish, it's gonna, and the dollar is bullish, right? And something happens, let's say we get the bearish sudden move, right? It doesn't mean that, oh, we're suddenly bearish. Obviously, if you're on the lower time frame, if you're a scalper or you're a day trader, for scalpers specifically, if you're overall bullish on gold and then a bearish move happens, if you go down to the 3 minutes or the 2 minutes, that bearish move is going to be a very long down, short-term downtrend, right? But if you're on the overall higher time frame, guys, it will take a lot for price to suddenly change its whole direction, right? So that's why when I started as a swing trader, I will basically I'll use the weekly and the daily flower and stuff like that. And I kind of still use it, okay? I still use those time frames because the higher time frame, like, again, it will take a whole lot for the 4 hour to suddenly just drop. Like, it does happen, but for it to drop and change the whole trend. But if you now go to the 5 minutes or the 1 minute, that short-term bearish move you see on the 4 hour is going to suddenly look like a whole new trend on the low time frame. So again, that doesn't mean that we have changed the trend. Doesn't mean that, oh, the economy is now bearish or whatever. No, it just means that, okay, one thing is that you're trading on the low time frames, so you have to you have to take more risk. But you also have to understand that that thing will now change and go back and follow the overall high time frame trend. Okay, meaning that, okay, the economy or the fundamentals that we have, maybe you're trading CPI or NFP, right, on the 1 minute, and that thing drops, right? It doesn't mean that, oh, now I'm bearish and like I'm going to be selling forever. No, the minute you see that price is not going back up, right, that means, okay, we are overall on a bullish trend, and price or that news trigger that came out when you were trying to sell is just a catalyst to continue pushing price to where it's already supposed to go. Okay, so when it comes to speeches and stuff like that as well, you have to understand that's also quite risky. People that just always jump into trade when Powell is speaking. Okay, if you don't know who Powell is, chairman, he's basically quite known in the Forex industry, and he usually have speeches. You have Powell, you have Hart, you have all of these different people that every time they talk about something, they usually speak about, okay, a new change in the economy, something that has happened that they want to do. So they're in control of a lot of things, and they have the right to change things. Okay, so that's why they're quite important, because they have a lot of power to change different things, and that can directly affect our market as well. Forex Live is a very good place to watch live speeches. You have different websites, you have different news sites you can follow this as well. But the thing about that, since you have so many channels, right, to watch all of these different things, what you want to now base your understanding of is which channel is going to give me the fastest result, or basically what I'm trying to say is that, okay, you want to find a channel that is firstly trustworthy, secondly that is up to news and up to time. Okay, so you can go to all of these different websites and all of these different news channels, and one is updating a minute later than a minute after Powell has spoken, or 5 minutes after Hart has spoken, right? You want to look, if you're actually trying to understand what's going to happen at that same moment in time, try to find a channel and try to find a website that is going to be live or going to be giving you that exact result at that time when that person is speaking, okay? Because it's actually quite important if you're trying to base your analysis, your chart analysis on these speeches as well. So that's just like just something I'm just putting out there if you want to use that or not. So basically, again, fundamentals macroeconomics, it's not just CPI, it's not just PPI, it's not just NFP. We're trading a country's economy, okay? And when we're trading a country's economy, we want to understand what's happening in that country, okay? Is that country in a booming phase? Is it in a shrinking phase? Right? Is it in a recovery phase? What is it actually doing? So then when you have that down, the next step you'll now do is then you'll go to your chart, you put up your technical analysis, because like I said in the beginning, for me personally, technical analysis is a way for you to find your entry and an exit, right? So you'll now understand that, okay, if you're, say you're basically a day trader, maybe on the 15-minute time frame, 5 minute, whatever it is, right? Maybe it doesn't relate to you at that time and at that moment, right? But you'll now look at the overall view and be like, okay, because this is happening, the result of that is happening. Maybe we are in a recovery phase. The currency is recovering its economy, right? It's been a quite bad economy, and the banks and the government, they're now trying to pick up things again to basically be good again in the economy. You can now base that in your analysis and be like, okay, if that's happening, what's most likely happening to what's going to happen with gold, for example, right? Obviously, gold is a safe haven asset. Safe haven asset is basically I'll get back to that. I just want to finish this. So basically, when you have gold, for example, okay, what does that mean? That means, okay, it's recovering. The dollar is recovering. Okay, how can I use that in my trading? Okay, you just understand that if the price is recovering, the dollar is recovering, right? It's strong, or it's getting stronger. Then maybe we're seeing, or maybe we are going to see long term, short term shrinkage or declining on gold, right? On XAU itself, right? So, like I said, gold is a safe haven asset, right? For those people who don't know what a safe haven asset, you have CHF, you have is it JPY as well? You have gold. You have some things in the market that are stable. Okay, what I mean by stable is that when let's say CHF. Okay, let's just take CHF. So when CHF is now quite bad, okay, the currency itself, the economy itself, okay, let's say that. It can be anything else as well. Investors, right, they'll put their money. I'll always use the example just to like give you a context into it. Investors will put their money into one asset. Okay, so they'll put their money into one asset, and then when something happens, right? When something happens in the economy, people get quite shaky when it comes to their money, right? Like they're investing in something in the asset, and the asset is not going the way it's supposed to go. What do? The next thing you want to do is probably take out that money or take out that investment, right? So what people do is now, with gold specifically, investor won't directly take out everything they have invested in something else. They'll now take out maybe, say, 50% of something, and then they'll put that into gold, right? And then they'll kind of hedge it. So maybe say the stock market. Let's forget CHF. Let's say the stock market. Investors are putting money into the stock market. Stock market is crashing. that's quite terrible, right? Like you freak out on shit. You take out your money, you put half of that into gold. What's going to happen is that you're hedging it, okay? Hedging it is basically buying and selling at the same time, right? Because you're not quite sure what's going to happen. So when you now put your money into gold, right? Safe haven, because gold is a stable metal, it's a stable currency. It doesn't really change and move over time, okay? That's also why you can look, if you go to the weekly time frame or the monthly time frame here. I'm using gold as an example today, guys, because gold is basically the only thing I'm trading now. But you're looking at, it's kind of forever. Oh, I'm sorry. It's kind of forever been in an option, right? Like if you go to the monthly, it's kind of forever been in an option, right? So it's forever bullish, right? But that doesn't mean that's okay. We're not gonna have times where price will decline, like here and here, right? So when people are then taking the money from something and putting it into gold and they're now hedging it, that means, okay, they're now trying to see that if that stock or whatever they're investing in is basically crashing, right? You've now put into something that will over time increase its value, which is gold. Okay, so that's why I mean, like my safe haven assets. Maybe probably not the best example to use, but that's what it is. Okay, so that's how basically investors, as well as like big companies, do them as well. They don't just invest in one thing and now they're just going to leave their money there, right? If you actually invest and you have the mindset of an investor's mindset, you'll now take some of that money, you'll now invest it in different things, and you'll see the outcome of those different assets, right? So same thing when they're putting money into something, they put money into gold, if that makes sense. Yeah.
That actually makes sense. Thank you. Johanna, you've just literally exposed everything to everybody on this call at this point. Now,
So yeah, that was like, wait, I just want to finish one thing, because I'm just gonna say that basically, guys, before I finish off, like not more to it, but I just want you guys to know that there is again one more to what you only see on Forex Factory. Two, try your best to not overcomplicate fundamentals of macroeconomics. I know there's a lot of wording, there's a lot of things that they say in the report that doesn't make sense. Highlight the things you understand, okay, and then try to put it together. And thirdly, try to understand that technicals isn't the only play here. We have fundamentals because, again, they push or trigger price to where price is supposed to go. Okay, so that's basically it.
thank you so much. Thank you so much, Johanna. And see, at this point, yeah, I'm just going to say Johanna has literally given you people all the cheat sheets that you need, and she has just said she has said like a bulk of everything. I wouldn't say everything, but a bulk of so much. Because I mean, the same way we say forex market is broad and is wide. It's the same way everything about it is in terms of its fundamentals, its technicals, and everything. Personally for me, I usually don't like to call myself a technical analysis trader or a fundamental trader. People would ask me, what strategy do you trade? Bruh, I am highly sentimental in how I view the market. Someone was I think I had a meeting on Saturday where I was answering like few frequently asked questions. And someone was like, he was trying to understand something about how I find my order blocks and all of those things. And I mean, technically I can show you, verbally I can explain it to you, but that isn't just what my trading style is based off. I'm highly sentimental with the way I view the market in every aspect. I mean, even on the lower time frame, I kind of have a reason as to why I view the market in that nature. Sorry, just in case you can hear the barks of my dogs, just completely ignore them. Thank you. Yeah, so before the call, before we put an end to today's meeting, I just want to say if you've been watching and you've been on this call from the very beginning till now, I just want to say a very big thank you. Okay, and if you're coming across this video for the first time on YouTube, I want to say thank you for watching this long. Please don't forget to hit that subscribe button, give me a like, a thumbs up. If you didn't enjoy it, please put that thumbs down. I'm all about good and bad reviews. That's how we get better. Leave a comment for me in the comment section. Tell me what you would like to see next time. Ask your questions, and I will definitely get back to them. And the questions that are not relating to me, but for other speakers, I will definitely get their replies from them and reply you on the comment section. Thank you guys so much for watching. And before we go, I was going to ask this last question, but I feel like I would throw it to myself. Okay. One advice that I would give to any intermediate trader, I don't like to call traders struggling. Okay, I mean, like, to struggle is not a bad thing completely. But sometimes when you call new traders or intermediate traders, you call them struggling traders. There's something it does to the morale of a person. Okay, there's something it does to the morale of a person. We are human beings, and I want us to learn to speak out of love and to encourage people. Okay, so I know as much as you want to critique, as much as you want to be blunt, as much as you want to be honest, you know, what I think we should do is always try to encourage people. Okay. So one advice I'm going to give if you're a trader and you've been wanting to implement fundamentals is skip the whole parade of the news. Skip the whole parade of the news and okay, today's NFP, today's CPI, we're going to trade NFP, we're going to trade CPI. To be honest, except you have a leading technical analysis, which is going to serve somehow as a sentimental indicator to have that report coming in to kind of catalyst the movement of prices to a certain direction. Don't have it at the back of your mind that, oh, you want to trade the news. That idea of trading the news is where they trap a whole lot of traders in this forex market. So let's try to avoid that. If you want to really inculcate fundamentals into your trading style, please do well to study. I would leave a link of some fundamental resources while I'm posting this in the on YouTube, so you could go ahead and read them, just so you have like a full-fledged understanding of what it is. And before we go, I'm just going to throw my last question to AG. AG, from your experience, what common mistake would you say traders make while trying to interpret macro data? What would you say is like one of the most common mistakes they make? Because a lot of people always just feel like, actual is greater than previous makes it a good, do you understand, a good result. And they tend to forget some certain things. What are those mistakes you think they can work on?
I think there are a lot of mistakes people can make when interpreting macroeconomic data. I
Yeah.
think the major one is you can't just take one news and then, because an economy might have one bad news, but generally they are still strong. I'll give example. So last week we saw a weak dollar, but it wasn't for long. It was not like long term the dollar is weak. They just had is they just had a bad week. That was not pun intended, but they just had a bad week, basically. So it's not that generally the dollar was weak, but as out of that week, the news they were having wasn't really palatable for them. So I feel like aside just looking at one news and then saying, judging, oh, the economy is bad, you really need to understand what exactly is going on. Why other than that news that came out at that point in time do you think the economy is going to be weak? Why do you think the economy is going to be strong? So I'll give an example. So the retail sales that came out for Canadian dollar, I think last week or a week before, it was good for Canadian dollar. After that, the news that came out was weak. So imagine me just seeing the okay, I'll stop using the word week and week. So the news that came out after that week was bad for them. So I can't just say, oh, because this week they have a really good macroeconomic news. I'm going long on all my Canadian dollar peers. Like I can't just use that to justify my trades for long. You have to look at the economy as a whole. Aside that, I'll also mention when you look at currency, when I say things as a whole, I'll give you an example. The same Canadian dollar, that same week. So Canadian dollar is pegged to crude oil. So most times, because they are when oil in general is doing well, you expect the Canadian dollar to also do well. It's like the Australian dollar and gold. When the gold is doing well, you expect the Australian dollar to do well, except for certain times. So that same week, the Canadian dollar was doing well because of the retail sales. Retail sales now, I'll just explain that a little. So like the amount of sales that have gone on in the economy as out of that period of time where was there enough money in circulation basically, and also you could see oil also doing properly that same week. So I'll be like, oh, okay. And then I look at my technical analysis and it showed me signs of us going bearish for the short term. I didn't even do much. I just had to mark my support and my resistance break of structure. And I took a sell on USD CAD. Not that I wasn't having the bias of, oh, USD is going to be strong. I just went short on USD CAD for a short period of time. I took sales. And as I had the same, so me and Ryan, we have this back and forth where we like to have conversations about our analysis basically. And when we had conversations, we had the same analysis, and then it was really nice because he called it on for you guys on his community, and everyone was in profit. People made a lot of money. People were happy, and I'll say thank you, Mr. Ryan, for that, for how you give back to the community. So things like that, you can't just say because this news came out, it means the economy is extremely strong. It all comes down to comparative advantage. So you can look at a peer that has this currency stronger than this currency, but comparatively, uh, if I take okay, I'll give an example. So the pound currently is their GDP came out bad. Their gross domestic product came out bad for um I think it came out last week, so it came out bad. But if you check it on the GBP JPY, long term is bullish. But because it came out bad for the short term, it's been on sales. So things like that, you need to look at comparative advantage. But if you take it to a different P&L, you can see the pound will show its weakness properly against the US dollar. I'm also shorting GBP USD because of the pay attention, not just one news. You need to think like an investor. Like I said, perception is key. The cup can be either half full or half empty. You need to think like an investor and not just think as a forex trader. Like I always tell Innocent, I'm not a forex trader. I'm a currency analyst. I'm a financial market enthusiast. So I wouldn't classify myself as a regular trader because I don't want to think like a regular trader. I have to think like an investor. I have to think like I have tons of money to move the market. That's the only way you'll be able to make lots of money in the market. Thank you very much.
I don't know if you're a Nigerian on this call, you obviously know who Gege is. So because of my small secret, you call me speed for eye. So me, I be regular trader, you be currency analyst. But no wala, no wala. Thank you guys so much for coming, watching this event till the end of it. I mean, I am I am happy, I am excited, I'm proud of everyone. It means that, the conversations were captivating enough, they were intellectual enough, they were able to transfer a whole sum of knowledge to each and every one of us. I mean, next time I would do my best in terms of time management. I've always tried to try and keep things in 1 hour, but sometimes, people are just spitting facts and giving out so much, dishing out so much knowledge that you're enjoying it and you can't as well just tell them to stop because you don't want to call it halfway. You get so. But next time I will do my best, at least even if I'm not going to tell my guest speakers, whatever question or what I'm going to ask them or anything. At least I'll try and make specs on in terms of timing and everything, just to make the event more I won't say shorter, but more time fulfilling. Okay, so that we could all go back to our day and activities of the day. Thank you so much. I'm going to say I just want to keep saying this thank you because there's no growth without people who are available to water you. Okay. I'm planting a little seed and I am loving the way it's beginning to nurture and to germinate. And thank you so much to everyone who is paying attention, adding the little they can. Please don't stop sharing the links out to people that you know, people who want to join. Don't stop sharing my videos. Don't stop inviting people over. I mean, we are not the most perfect people, but it is through baby steps that baby runs. Okay, so please continue to help us continue to be a part of this good work we're doing, and let's continue to share the light to people who deserve to know the truth about this industry. And basically, like I said, there's no lifestyle here. It's not a lifestyle. Like, my friend was asking, why are you on here with singlet? I was like, even the Bible says I should come as I am. So who am I to, go and wear suit and try to fake it? It's just for the love of it, and for the enthusiasm that comes with it. Thank you guys so much. I'm going to send out my analysis to the community very soon on the trade I'm taking this week and how I intend to take them, as we didn't get the chance enough to look at the charts this Monday. But next week we're going to do more technical analysis, and I'm going to have another wonderful guest, on the call. No, I'm not giving a hint who the guest is, just expect it and wait for it. So keep tuning in. If you're still watching this from YouTube, don't forget to hit that like and subscribe button, turn on post notification, and see you on the next episode of TN Chats with RionFx. Thank you so much, AG baby. That's what we call him. That's what the girls call him. Thank you so much, Johanna. Thank you to each and everyone on this call. I see all of you. I see RionFx on the call, GDJ, Onuha, Rindabs. I'm going to try and call as much names as I can in the next 1 minute. Daniel Jersey, Boy Big Man, Dova, Peter. Who again am I saying? Some people are viewing anonymously. AD, Kambai, Ricky. Thank you guys so much. And I'll see you guys on the next episode.